Money day, guys and girls. If you're watching this, you're now locked in and learning with Vel. Now, I've shown you guys already the LWV strategy, which is the session candles, and I've shown you guys what to look for. But in this video, I'm going to show you guys what not to look for. So a lot of you might be taking trades where you're not really becoming successful based on the type of candle that you're taking the trade off of. So today we're going to highlight the exact candle you need to find in order for you guys to be more successful. Let's go. Okay, so the main important thing when we're understanding the LWV strategy is how to identify a profitable session candle. Now, it might sound easier said than done, so naturally I want to show you guys. And of course, if you guys are inside my Discord, jump onto my live streams. I do perform a free live stream throughout the week. So if you guys are inside my Discord, if you click the links in the comment sections below, in the description box, you guys will be able to see these strategies play out in live time. Okay, now essentially the most important thing here is understanding what's happening on the left side versus the right side. Now on the left side we can see we are with a bullish structure, and on the right side we can see we've got a bearish structure. Okay, so it's going to be really important to understand the significance of each one. Reason being is because if I find a session candle inside of here, when price comes back up, yes, I can take a short, but if I take this short, I better take this short understanding that this is probably going to be a very short trade, because of course the structure is bullish. Okay, and if I take a buy on this side, okay, when price comes back down here, then I need to understand that price potentially can go against me because the structure is bearish. We have to take trades based off of the bias. Okay, so with that being said, we're going to have a look at some examples here, and this one is quite cool to have a look at. So we're going to start over here. This was a trade that I sent out inside my community, and this trade, we actually took this trade based off of two different reasons. Okay, so the first thing that we saw here, if you guys can't see it, I'll make this chart blank. The first thing I hope you guys can see, I'll allow you guys to pause the video. And what you should be able to see here is, you know, a fair value gap. You can see an imbalance here. Price came down, played into the gap, took some of the liquidity, filled some of the more imbalance that was here. Then it pushed up, and then it came down again for the rest of the imbalance to play out of this sell to buy candle, and then price eventually pushed up higher, right? So in actual fact, what happened is we found out that we had a session candle here, but then imbalance below. So as much as we had a session candle and imbalance below, what we had to understand is if price does react from here, which it did do the first time, and then it came down lower, we have to now think, okay, maybe price will come down to fill some of the imbalance. So if we take the trade off of the head of the candle, we lose the trade. If we take the trade off 50%, we still lose the trade, because you guys can see here price comes down 36 pips, and our SL, when we usually trade in the session candle strategy, is 35. So what we would have had to have waited for is two things. One, for price to come down and fill some of the imbalance, so we can take the trade right here, or even right here, okay, where the imbalance begins. Okay, or we could wait for price to push back up into this zone, wait for price to close back above, and then when it comes back down, we look to take the trade. Now, in this case, if price had come back, if we had been waiting for price to come back down, it wouldn't have touched our zone, which would have meant we would have missed out on this trade. So we have to make a decision in understanding what other confluences do we have that can support us getting into a trade. If it's only the session candle and you're waiting for price to come into this candle, then your chances of profitability, like I said to you guys, is going to give you between a 75 to a 90% accuracy. Okay, you're not always going to be successful, but hey, look at this. If we take the first one, well, the first one we make some profit. I don't think we catch 1% on this. Okay, the first trade here, it comes to 27 pips, so we don't even catch 1%. Okay, so really and truly we take an L, and then we take another entry as it comes down again, and we take an L. Okay, one of the things that we obviously want to take into consideration here is what price action is doing. Okay, if price is aggressively dumping downwards, we're not going to run into a trade. We need to have a look at what's happening on a lower time frame to see if price looks like it is slowing down. But if price is just aggressively pushing down, then we take a step back and we say, hey, let me wait to see what happens and let me see how price plays out. Okay. Now, ultimately, if we take the trade out of the imbalance, we become successful. If you guys are unfamiliar with the fair value gap or with the fair value gap, or it's oftenly known as imbalance, if you're unaware on how to take trades based off of those factors alone, then that, my friend, is something you need to learn by either staying inside of the Discord and, of course, getting access to my education. My education is to provide you guys with the clarity that you needed, and I'm sure at some point, guys, I'll probably go over it on my YouTube channel as well. Okay, so this becomes a trade that we unfortunately lose out on if we're only sticking to this session candle. If we're only sticking to this session candle, this isn't a bad trade to lose on, because price has still gone up in the direction we wanted it to. All it tells us is that the timing as to when we got in the trade was a little too early. Okay. But if we come across, I drew out some examples here. This is another good example. Okay, now we can see here that price has opened bearish. Okay, price is dumping downwards. The first thing I've told you guys about is understanding the structure. On the left hand side, we can see we're bullish. On the right hand side, we can see we're bearish. So it means that we're not going to get into any buys on this side expecting us to, for price to then go and make a new all-time high, or for price to clear the highs, because we know we're in the schematic of creating lower lows and lower highs, right? So in this case here, we have a London session candle. Price opens, closes, and it continues dumping lower. It definitely pushes down more than 40 pips. We can see here it pushes down over 60 pips, and then it pushes back up. So when it pushes back up into this area, if we take this short, we take a short off of 50%, and we take a short off of the foot of the candle. Okay, so if I mark here, we go 35. We can see here that we stay in the game. If we clone this and we go on the 50% line, price doesn't come to our SL. Okay, so price goes up, it comes down, and eventually we can see here price pushes down more than our 3-to-1 R&R. It gives you a 4-to-1 and a 3.8. Okay, so 3.8 to 1 and a 4-to-1 risk to reward. Okay, so we end up being able to net 7% here across these two trades, right? But what I want to show you guys is what not to look for. So in this instance here, we have a where are we? In this instance here, we have this candle right here. Okay, we have this New York session candle. Now, price has pushed up more than 40 pips, very clearly, right? But then when price has come aggressively dumping downwards, what's happened? Yeah, we've got into the trade, we've taken two buys, one from the head, one from 50%. We can see that it comes down and it stops us out of the trade, and it doesn't give us a lot of profit to go break even. So we have to understand here that because the structure is bearish, it's probably going to be most unlikely, okay, or highly improbable that, improbable, is that a word? Let me know in the comment section if that's a word. But it's likely going to be highly unlikely, okay, that this buy is going to give us what we're looking for. And that's because the structure is bearish. If the structure is bearish, we need to be thinking about selling in terms of us waiting for that pullback. We're not just jumping onto a moving train. We're saying, hey, cool, price from here continues to drop another 60 pips and then it pushes up. So this pullback, okay, this pullback is a valid pullback for us to say, hey, price will continue going in the favored direction, which in this case is down. This creates a lower high. This then creates the lower low. Lower high, lower low, right? So we don't want to be buying something when we know the structure is making lower lows and lower highs. Over here, we have a similar example. This example is the fact that we understand this is the London session open. Price pushes up over here. 30 pips, pushes up 35. Let's call it 38, 37. Either way, it doesn't reach our criteria. Eventually it does, and it gives us 69 pips. So when it comes back down, you should be looking to buy, right? That is what the criteria tells you. You're looking to buy. However, again, because we're looking for, because we're taking into consideration what the structure is, we shouldn't be falsifying moves, meaning just because we're seeing this candle, we shouldn't be telling ourselves up, it's going to work. And this is what actually teaches you guys to be more patient, and also allows you guys to be more profitable. because you're not just haphazardly jumping into trades. Yes, price has moved more than the amount that you're looking for, but we are in a bearish schematic. Okay, price is making lower lows and lower highs. So we shouldn't get caught up buying something when we know price is still continuing to dump lower. Okay, and we can see that by these type of big bearish candles. These big bodied black candles are showing us that price still wants to come down lower. Okay, so if we get into this buy, look, price ends up down here, we can see that it doesn't work out for us. But what we can do and what we can understand, if I remove this, is two things. Looking at this candle here, we can understand two things. One, when price moved up more than 45 and it came back down, it just slapped straight through our candle. It closed beneath the candle. So that should have been a telltale sign to say, hey, price is not actually doing what we want, because that's what we want. We want price to react inside of the purple zone. If it doesn't, then that shows us that price isn't doing what we want it to do. That's a really key important part of our confirmation of taking a trade. Okay. And the second thing is, well, does price move down more than 40 pips beneath the candle? We can clearly see it does. Okay, right here, we can see price comes down 55 pips. So when price pushes back up, we're going to take two entries. One from the foot of the candle this time, which is the bottom of the candle, and the second from 50% of the candle. So by us now understanding, hey, price has moved down more than 40, we're going to shoot, and we're going to shoot with the expectancy of being more profitable than getting into the buy. And that's because the market structure is bearish. If the market structure is bearish, providing we get pullbacks, we want to sell. If the market structure is bullish, providing we get pullbacks, we want to buy. So of course, a lot of you may be struggling with this, and that's just based off of the fact that you're not understanding the market direction. If the market direction is bearish or bullish, then that needs to alter your decision in terms of what type of trades you're looking for, and that's going to help you be more profitable. For more information on not just this strategy, but maybe other strategies that I use, that I've taught, you guys should simply click the link in the description box. I want you to comment Money Day. If you've made it to the end of this video, comment Money Day in the comment section below. Let me know your thoughts on the video, and I'll see you guys on the next one. Always remember, guys, that every day is money day. Peace.